The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It is Brian Caprice from Keep Trading Simple. Welcome to today's market update, analyzing potential opportunities in the Nadex markets. So pretty exciting last 24 hours. A lot of stuff to talk about today. Last week was actually pretty crazy. Sunday, Monday, awesome fun, right? Awesome fun, lots of movement inside of the markets. And then what happened? Everything basically retraced and kind of went flat on us. So that's never the most fun, right? This week, we had a lot of kind of the same similar things happen. Sunday, absolutely great. Monday, a lot of great trade setups. The pound was literally on fire. It was just, I mean, it was amazing. It was like a rocket ship. Things leveled out. And then last night, there was a couple tweets back and forth that literally sent the market tanking and then retracing back up again within an hour. So it was like, just kidding. I didn't mean what I just said. It was overblown and came back. And I'll cover that later on today. So lots to cover. Let's just dive right in, okay? First things first, let's go through who I am. For those of you that are new, I want to welcome you guys out. I have a little bit different of a trading kind of mentality. So let me run you through it so you understand where my opinions, where my bias is, and kind of where my analysis come from. So I started trading right around the tech bubble, that 1999, 2000 time frame. Seen a few different crashes since that time. Started the kind of traditional way, right? Traditional options, stocks, because that's all I knew existed at the time. And I live in the DC area, so tech bubble was pretty big in this area. So everybody, I mean, I was there, I had friends, and was in, that's when I was back working. Got to see those companies where, if you have a great year, you get an S2000 as a car, some of these tech companies. Didn't really make any money, but, those companies it was just amazing. So everybody was into stocks. So learned stocks and options about 6 years in, found foreign currencies, fell in love with that market, the 24-hour cycle, loved the idea of leverage, didn't need as much as I needed in the stock and options realm. Spent a couple years doing just solely that, ended up becoming a financial advisor. I worked for one of the big three advisory banks and kind of got a look from the inside what wealth management looked like. It was very eye-opening to me, realizing that the financial advisory system, while it does benefit some people, it wasn't what I thought it was. Learned nothing of trading, learned nothing about chart reading, and it was just absolutely blown away. And it was a real big telltale sign for me when some of the most tenured advisors, inside of the office would ask me my opinion on different stocks that they were trading for themselves. And I was like, this is unbelievable. You've been doing this forever. So what I realized was my true passion was teaching people. So my goal for today is to give you guys a few golden nuggets. Maybe there are a few trade setups that you guys like. That's entirely up to you. But my goal is to teach you guys something new that you either didn't know before or maybe forgot. And again, take that forward with you and be able to help augment your trading. All right. So I've written a number of different courses. That's kind of why Nadex asked me to do these presentations for you guys. I absolutely love Nadex as not only a way to trade, but also kind of the mentality they have behind the products that they are offering. I've created a 30-minute trader program, 5-minute binary courses, which have been very, very popular the last couple of weeks. I have a couple different newsletters. I also have a high volatility trading course that came out, which is specifically based around Nadex. I've traveled around the US and Canada helping people learn how to trade. But first and foremost, I am a family man, a dad. I coach for my sons. The little one is basically attached to my hip at all times, except during webinars. Mom actually has to take her out of the house because she wants to do webinars on my lap, which is hard because she's a 2. She doesn't really speak great, but she does love the chart. So she's already, getting that trading mentality, which is awesome. And the little guy on the right, he's actually not little. He's 10. They're both 10. They're twins. He's actually starting to trade this summer. He started to do some analysis, and I kind of taught him the methods that I use. So he's actually getting very, very into it. So I'm all about passing on our skills now to not only you guys, but also other people as well. All right. So let's dive into the risk disclaimers, because if I'm going to talk about charts and potential risk and profits, obviously the risk disclaimers matter. So Nadex's risk disclaimer is trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile and investors risk losing the cost at the end of the transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instruments on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes including Forex, stock index futures, and commodity futures. All right, Nadex is a registered trademark of the IG Group. Let's dive in. So first things first, guys, let's go through the agenda for today. What we're going to do is we're going to cover the upcoming news events. Okay, this is not a very action-packed week as far as news goes, although there was a lot of news today that I feel is extremely important to cover, and we'll dive into what the rest of the week looks like. Then what I'm going to do is I'm going to cover indices, and we'll talk about where they are. Very interesting place, and based off of that news, or that, I guess, quote last night, I had a completely different picture for the indices last night. And then an hour later, when they retracted what they said, and then the president came back and said, no, 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 what that guy said was wrong. I was like, no, I had some great setups based off of that information. But again, because they redacted all that stuff, again, the markets have now gotten a boost. Then we're going to cover Forex. I know not everybody's a Forex trader, but if you are a trader in general, you should learn all markets. It is truly a global economy out there now. If you're just trading the indices, you're not doing it right. Trade everything. There are amazing setups, particularly Sunday night to Monday this week was absolutely phenomenal. I know I mentioned that each week. And again, I love trading Australian news at night. It's one of my favorite things to do as far as trading goes. Literally, my two favorite times are basically 10 a.m. in the morning and 9 p.m. at night to trade. Those are literally my two favorite times, reversals and Australian news. And then last but not least, we will cover commodities. Now, commodities are in a very interesting place. When I talk about commodities, obviously oil is a big one. We are in summer gas right now. With everything going on, we're seeing people kind of leave the houses. They're going out, they're buying gas again. Demand has kind of been an interesting story. And we'll talk about that. And then also gold and silver. Gold, obviously, hedged for inflation. Very interesting place where we are with gold right now. Many people predicted this up, and we are kind of a bit higher now. But I don't think we're as high as many people thought we were going to be. If you guys remember some of the speeches last week, inflation has not been, it's not rearing its head, and that's kind of where gold has, really kind of gotten most of its kind of push, right? The U.S. is printing money, and basically everybody's printing money at this point. Inflation has not really kind of peaked yet or become an issue or something that it is even on the radar right now. And again, gold is continuing to push higher. It could be somewhat of a bubble as well. We'll see. And then obviously silver is kind of a secondary to that. All right, so let's go right into the news releases. So let me bring in my normal site for news, and you guys are very accustomed to seeing this one. All right, so Forex Factory. Love the website. I use it for a couple different reasons. Let me make this a little bit bigger so you guys can see it a bit better. We'll go right there. Whoops, there we go. I mostly use this one, guys, as you know, for this 24-hour pip change. It's giving me a read on what's happening on the currency market 24 hours a day, and that's why I like using it so much. I mentioned before that there was a lot of news today. This is kind of what I'm talking about. All right. Now, why this is very important and why I should kind of take note of this is, again, you may have absolutely no idea, and nor do you really need to have to understand what French, flash PMI services or manufacturing PMI is. But understand a lot of this PMI data, and again, you can click on any of these, anything above 50 shows economic expansion. Okay. What are we seeing from this picture? Well, I see all of Europe and all of the UK approaching, if not above, the economic expansion level. Okay, manufacturing expansion. So they're starting to produce again, right? Then we come down to 945 and we saw the USD data, and we were expected to be at the level, and again, it's kind of like Nadex, right? Above 50, and we came in at 50. So it's like, yeah, we don't really know. It's not expanding or contracting. Well, coming in at 49.6 means that we have, again, a contraction of manufacturing. So not necessarily the best thing for the US when everybody else seems like they are starting to kind of come out the other side. All right. So that's what we got going on today. Tonight, again, New Zealand data, not necessarily the biggest thing that we need to worry about. Now, going into Wednesday, there is actually what's considered no high impact news. Okay, there is oil inventory reporting, and again, that's a number that we need to focus on. It's a bit early to get that data right now or do the analysis, but that'll be tomorrow morning at 10:30 a.m. That is a great trade or a great time frame to kind of look. You have the reversals going on in the market, right? The 10:30 reversals, but you also have oil inventory. And again, with summer demand, people starting to travel again. I don't know if you guys listen to the news much. I listen to it to kind of hear what the overall market is doing and kind of are saying, and then kind of do the opposite of it. But they're talking about how people are looking to vacation, and they're looking at their different venues. That vacation by air and hotel is not necessarily, the demand is not there, and it's going to be a while before that returns. But other things like Airbnbs and road trips, those are kind of coming back because people don't trust the system right now. Again, you don't know who's been in the hotel or if the hotel can sanitize and those kinds of things. So it is kind of interesting. So again, road trips with cars means more oil demand, which means, again, some plays. That'll give us a Wednesday kind of trade setup. Thursday, we have some ECB monetary policy meeting notes. Those are always nice at 7:30 because they're not too early. And again, we were seeing all this great European data over here. So again, what could they say here? Could there be some great trade setups early morning? Sure, absolutely. And again, you know, a recovery in Europe is also good for our companies for exporting, right? And then we set into the US data. Final GDP numbers, this -5 hurts a bit. Looking at the unemployment claims right now, the projection is 1.3 mil. And again, this, I don't know if we're going to actually be this high. We have our bank stress tests, we have our durable goods. And remember, last time durable goods, they were pretty bad. They were expected to be positive. This core durable here, they expected, you know, worse, but again, 17 is not great. And again, over on this side, you see -14, -7. So, you know, it looks like they're planning an adjustment in both of these, which again is not great, but looks we can finally get some positive numbers. If these come in negative, that's going to be a rough little morning for the US, right? And then on Friday, personal spending is always important. It was negative. They're showing positive, meaning people are starting to spend. Consumers are starting to spend. That's pretty much, in my eyes, the #1 sign of the economy, right? Of recovery. If consumers are spending money, companies get profit, the economy grows. If people don't feel like spending money, aren't secure in spending money, guess what? We see it right here in personal spending. So for me, I always believe that this is a very important kind of foreshadow of what's coming, all right? And then revised University of Michigan consumer sentiment. It's revised, so it's not going to be that big of a deal. So for the most part, you guys can see we are really kind of anemic in red releases this week. Again, it's June. It's, you know, 3/4 of the way through June. This is a very common kind of first travel week. A lot of schools are out the second, third week of June. And again, people will be taking their vacations right now. That's what we're kind of seeing. We're seeing a slowdown because of it. All right. So not a big week news-wise, which means comments and quotes like what we saw last night is what's going to matter. Okay, I can click this last night. Let's see. I can go back. I don't know if you guys were able to see this. If anybody was around last night, let's see. Did they remove it? Oh, here you go, right here. So this little bit of information right here, I was presenting for my students last night. I do nightly webinars for them as well. Peter Navarro declares the trade deal between Trump and China is off. Okay, that was 15 hours ago. So last night, the markets all they just tanked. It just dropped. It was like, oh my God, a lot of dollar strength, markets collapsed. Then right after that, it was pretty funny. Whoops. Then after that, about an hour later, he came back and said, hey, wait. Oh, that's not 38. I don't need 38 hours. I need like 15. There we go. Then all of a sudden, look at this. The decline of dollar happened at warp speed. Then all of a sudden he said, wait. It was taken widely out of context. Just kidding. I didn't mean what I said. I said it, but I didn't actually mean it. And then right after that, Trump came back in and basically said, hey, the trade deal is fully intact. Forget everything that the guy said. We're putting him in timeout and putting him in a tinfoil hat. So there's, in every statement that people make, I truly believe that there is some level of truth to it. I feel like because of that statement, I was mentioning it last night, I feel like there will be some media barbs happening back and forth, maybe, to say there has to be something. There had to be some reason that he said that the trade deal is off. Something that he believed or something that he misconstrued. I believe there's probably a little bit more to that. So with the lack of economic news for this week, right? Again, there's really not much, right? That means that the media could be taking over again for this week, right? China says, Kudlow says China has picked up its game. A lot of stuff going on, all right? A lot of stuff going on. So I believe that we need to keep an eye and kind of keep our ear to the ground listening for those. I think those are going to be the big, market movers of the week. All right. So with that said, let me drag this one and pull this one out. Let's go over and pull some charts. So first things first, let's go into the indices. All right. So obviously you guys can see this spike right here. I'll make it a little bit bigger so you can see it. See this thing right here? Let me make sure my time is correct. There we go. You guys can see this right here. This was last night. I don't know if you guys can see this candle right here. This guy. Yeah, that was last night when when all of a sudden the trade talks were off. Okay. Then immediately, and 1 hour later, he said, no, just kidding. That's not right. It's not real. It came back up again, and that kind of gave the market a little bit of a boost. Now we're pushing higher. Okay. As you can see on the daily, this is pushed much, much higher. Okay, so we had kind of a short entry over here. I believe that was on the 4-hour. Yeah, we had an area here where they're looking to short off of, and you can see it kind of pushed down. We didn't quite make a 3-to-1, kind of a push. Actually, I guess we made it over here, but again, this was actually something I was looking for last night. A collapse below and a push lower. I'll remove that now. That was, kind of a setup that if they didn't redact that statement, I was looking for shorts today because I was like, once retail traders get wind of this one, this is going to continue to fall. And I was looking for, pushes down to this level. Obviously, when he said just kidding, we got to push higher. So where we are now in the daily, okay, let me shrink this a little bit so you guys can see, all-time high, okay? If you remember what I was saying before, the way to play these things like that, again, there are people that believe, and again, I'm not one of them, but there are people that like using extension tools and trying to predict using kind of percentages where we would have a turnaround. No, that's all fine and good. People can do that, and I'm okay with that. I don't believe that this is truly indicative of what's happening in the market, particularly with European data coming back good and ours not. So I feel like this is a reaction to what we saw last night, and everything was being good. And again, I feel like there's still some truth to that hasn't come out yet. So the way that you play these things is you look onto lower time frames, okay? I actually did have a short in this position. I was looking for kind of a retrace back up again, and then the news came in and kind of messed it all up. The way that you play this is you're looking for what, if you guys remember me saying, that failure to go higher, okay? With price still grinding up, we don't actually have a level where we know that sellers have stepped in. Now, currently right now on the 30-minute, you can see that we do have a red candle. So right now, there were some sellers that stepped into the market, or there was a lack of any buyers that existed, right? When there was no buyers, sellers were like, hey, listen, I want to get out of this trade. If nobody's willing to buy it, what do they have to do? They have to lower their prices to find someone that is willing to buy it. And that's what we're seeing right now. Now, the question is, what's going to happen next? It is lunchtime. Again, it is noon on the East Coast. So again, we will see slowdowns and we will see pullbacks. The question is, will we have something like this where it just bases and then continues to push higher? Or will we start to get a bit of a retracement? Okay, if we start to get a bit of a retracement and come back down again, that's where we're looking for a top like this, and it gives us a level where we have some sellers, okay? Again, that wouldn't be green. I'm going to change it to white to make it a little bit easier, okay? But that's what I'm kind of looking for right now inside of the NQ, because it is so high, because again, when you're talking about all-time highs, any type of projection tool is kind of like trying to use a crystal ball, right? I can say that it's a certain percentage higher, and that would be an extension of so-and-so, but I mean, unfortunately, you're trying to predict what's going to happen in the future, right? You have no actual concrete proof, where if this does turn and push back down again, I have concrete proof that sellers stepped in and buyers ran out at that level, okay? So it's a bit more of a confirmation. That's just, again, whatever strategy you feel like using, again, it's entirely up to you. Just make sure you test it and, again, manage your risk. So I'm looking for some type of a top. I want to see where this turns. And again, that's typically how these things go. Again, I mentioned it last week, those failure to go higher. So that's what we're looking for NQ. Again, it's pushing. I don't honestly feel that this has any justification to be pushing this high. Last week, what were we hearing? Beijing was starting to close down again because they're starting to see phase 2. There was like 180 new COVID cases. A couple days ago, we saw 20 different states that were in, 100% increases of COVID-19. You're starting to hear about some people that are talking about closing down again. I feel that there will be a true second wave coming of this. I don't feel like, I don't know. Again, a lot of people said that it was going to come this summer. I was one of those people, and I still feel like it will come back again. And again, I feel that people are getting a little bit liberal with what we're doing. I feel like a lot of people are going out, and the market's still driving higher. The economy, they said that we will prop this economy up. We won't let it fall, but none of the data looks great, okay? We can continue to inflate this, but when none of the data is there to justify this rise, eventually you got to pay the piper. Eventually, you got to pay the piper. So that's kind of what I'm looking for in NQ. Now, S&P is a little bit different. S&P on a daily, you guys can see, we're not quite at all-time high. So it's a little bit different of a scenario. Now, here are some levels from last week that we had talked about. Last week would have been, God, what's the date? I can't even believe it's the 23rd. Last week was the 16th. So in looking back, let's pull the time on this one. You can see the 16th was right around here. And we were setting this zone up. This was the entry. Actually, the 16th is right here. So we had set this position up last week, and on Wednesday last week, we got the decline that we were looking for, right, in the S&P. Also, if you look here on the 19th, a couple days later, we had the same hit, and it dropped yet again, all the way back down to an area where we were saying, hey, listen, this is a great little target, and we ended up hitting it, okay? Last night, this is what I was hoping. We were grinding. I'm like, give us a little bit more push up. Please let me go into Tuesday. the Nadex webinar, please let me be up into this zone so we can look for shorts. But unfortunately, we had this, which kind of wiped some of the stuff out of the market. That was the Navarro speech, right, coming in here. We're back at that level again, and actually, it's in not a bad place. Again, the entry already happened earlier this morning for the open and kind of pushed back down again. You were able to get a small short out of this one. And we're kind of in an area now where, again, that failure to go higher, what I mentioned in the NQ, is exactly what we have going on right now, okay? I'll mark it off with white. This is what I'm talking about in that failure to go higher, okay? It's an area where price has been turned around, right? Pushed down and then was unable to go much higher. You're able to reduce your risk this way and push it to the downside. It just happens to coincide with the prior level. So again, it's kind of an area where I'm looking for shorts at this point. Again, it helps keep your risk a bit smaller. But again, it's the same level that we talked about last week. We had one entry on Wednesday last week, another one on, what's the 19th? Friday? Is that what it was? Yeah, they're all messing together. Yep. And then Friday we had that push to the downside. So we've already had 2 hits from the zone. So it has reduced in kind of its potency to the downside. Many different ways to play this one. Where we are now, again, S&P is a knockout asset. So again, there is some potential knockout brackets for this one, but there's also some, so there's some weeklies in here as well that you may want to look into. All right. I'm not going to tell you which ones, but again, let me see. Actually, let me pull it up on mine real quick, and I can tell you how many are probably not bad. Not bad, right? So right now the indicative of that one is 31.34. It looks like right now that the closest knockout is 31.46. It's a bit above. It's kind of sitting up in, let's see, I want to make sure I match this up. We're at 44. We're off by about 10, so it would be 54 here. So it looks like, as far as the knockout goes, the knockout would be sitting right there. Okay, so not a bad place to be. Not a bad place to be on a short, in my opinion. All right. As far as, and also another thing that I was mentioning on this one, the S&P, let's see, where is it? There is actually, I was actually looking at some of the weekly binaries on this one. There is actually a weekly binary that the risk on it is not too much. If you believe that we are going to have a turn this week, which I do think there's a probability that we'll have a turn and kind of push lower, because again, I don't think there's enough news to really justify anything that is earth-shatteringly great, right? All we're going to hear is media-based news, which does media tend to give us positive news or negative news? Like, which one is better? That we found world peace or that somebody invaded another country, right? They're going to focus all on the negative, which tends to drive the market down faster. There happens to be a binary about 120 points lower in the S&P that I think is actually not a horrible one. The risk is rather low on it as well. That could provide some potential. There's actually 2 of them below that I think are actually not bad on a weekly basis, risk to reward wise. All right, if you're in the camp that we will have a turnaround, and so I think we are kind of set up for that for the S&P. Now the Dow, again, we just came off another level, a level we've been looking for last week. We had one marked off and it ended up hitting and going much lower, much like we saw in the S&P. I do have a zone much higher up here around 26,550 that I believe is, in my eyes, what I would say it would be a pretty high potential. As you can see, we actually just a few hours ago, let's see, that hit at, oh, I can't see, let me move over a bit. About 8 o'clock this morning for market open. Again, we got to push down again. There was a 1 to 3 out of that as well. It's already unfortunately gone. There's nothing we can trade off of it right now. But that was based off of a level that we saw last week on the 19th as well, last Friday. Here is the Navarro spike. I know you guys have seen the parabolic. Again, if you guys have been following Nadex and the webinars that they provide, they really do provide some amazing content. There are many educators on here besides me. One of the special webinars I did last year at the end of the year was on parabolic retracements. This is basically the exact definition of it. And whenever we see, great examples, I always like to point it off, right? Was Navarro's speech a very high emotional responsive drop? Yes, the trade talks are off, trying to lie, right? Boom, right into a level. Hey, guess what, guys? I'm just kidding. Okay, what does it do? It retraces back up to where it was before price happened. Okay, so this is the exact definition of a parabolic retracement. So you guys have seen these things. It doesn't get any better than that. So that's what there's the definition, guys. Okay, I always like to show examples. But right now, to me, it looks like this is having a little bit of a problem. It doesn't look like it's pushing into all-time high territory like the NQ. So what I'd be looking for is kind of confirmation patterns, red, green, red confirmations, crossovers if you're a moving average crossover person. If you are, please use EMAs, not SMAs for that on the lower time frames. Any type of confirmation to the downside, I do think we will push lower. I think we will have some problems right around 2,600. But I think the overall kind of this level where we hit down here, down at like 25,700-ish area, I do think that's probably more where this is looking to go, at least later in the week. Like I said, unless there's world peace, unless there's something crazy with the media magically will come out and say, I do feel like this one will have a negative week as well. All right, so let me jump across now. I'm going to switch gears. Let's go into currencies. Now, currencies, as I said, I was looking for shorts off of this level last night, and unfortunately, Navarro's news beat me to it. It did the same exact thing, very emotional news. You guys can see there was a level right here. Then again, great level, was retested once, dropped right into that level, and then retraced all the way back up again. We're sitting in a zone right now, but on a daily basis, we are still very, very high on the curve, right? We spent all this time, the beginning of January, just collapsing, and then we rallied all the way back up, hit that level, that daily level, and then started to kind of, we're pushing back and forth. So on the lower time frames, we are sitting inside of a 4-hour zone. Those are typically great shorting opportunities for me. I love 4-hour zones in currencies because it's a true fraction of the day. It is pretty high into this group. We do have a confirmation to the downside, although the risk level in this one is a little bit big. Unfortunately, this is not a knockout-based pair. I wish it was. This would have been a great knockout setup, but unfortunately, those are not there yet. So please, each week I say it. I know people have mentioned it as well. Tell them we want more knockouts. They're great things to trade. Aussie dollar, dollar CAD, we want those for knockouts. I'll get it. My birthday's at the end of August, so I'm hoping that by my birthday I can talk to the right people and we can get it. But your emails will definitely help, guys. But this is a nice little setup in my eyes. There's 2 levels. That's what I would consider a level on top of a level. The risk on it is actually not horrible. Oops, I took that one off. You can see it's actually pushing down to the last area. We really had kind of a true basis of buyers stepping in. Again, this is the Navarro spike down and then pop up again. Price push down, and right at this level, you guys can see the base here. That's what we bounced off of. That's where the 1 to 3 target would be looking at. So again, I don't think it's a bad position in the overnight. There's no Australian news tonight. It's only New Zealand, but it kind of pairs along with it. Now, Aussie yen. Yeah, here was this position. Again, this is the Navarro spike right into a level that was tested, that skyrocketed a bit higher. I was actually looking for a short in this position. The reason I left it on my chart is because I do feel also that the Aussie yen will continue to push lower. I'm holding it here because, again, it was tested one time, and then price came into it pretty deep with this emotional response. Buyers obviously stepped in, but it's such a small level of risk. If we can get a push through the bottom, I've mentioned this term a few days. I haven't gotten a call from the book company yet, but this is that Harry Potter trade that I talk about, right? That momentum breakout. If we're able to crash all the way down and we get a bit of a retrace, anything below 73.16, I'm looking for shorts. And I do believe that the 1 to 3 and the 1-5 are good targets. This would be most likely a binary-based trade. Definitely something on my radar. It's got some room to run at this point. You're talking about 75 pips before we get down to that zone. The daily ATR is 134. So this is an entry kind of within 1 day of reaching. And again, you got to look for eventual targets down here at 71.50 because that's the last time the price, at least on the daily, really stabilized itself. But look at the explosive move off of this. I mean, over 2 days, this moved 450 pips in 2 days, and the daily ATR is 134. So it did about 3.5 times what it should have done. There's typically some buyers in that area, and I love the way this is formed, this formation down here. So that's what I'm kind of looking for right now. And again, on the 30-minute, you guys can see it took 30 minutes to go down and 30 minutes to come straight back up again with the trade. Trade war is at full, DEFCON 4, boom, boom, right back up again, looking for that zone lower. Now, your yen. Your yen also had something similar, okay? We had marked off a zone back here last week. I will put a line here just so we can get kind of a reference of where it is. This one for me, unfortunately, is not super excited about it. Like I said, it missed its entry down here of levels that I was looking for to reverse off of. I mean, very clean drop on the 30-minute. There's almost no wick in here at all. I mean, literally down, straight back up again, no wick. it missed entry, got front run, and we're kind of stuck in the middle. I do feel that this will also most likely continue pushing down, but finding entry for it, finding an area where there's some extra sellers to help power it down, I just feel like they're not there, right? I do still like this, 119 level as far as targets go, but even on the 30-minute and even the 15, the drop that we had early morning today, there's just not enough there. I feel like it needs to go a bit higher before we can get a true level of sellers. And again, not worried about this kind of spike right now either. That was the Navarro piece. So yeah, nothing truly on this one. It's just middle of the range. Don't really love it for any setups today. Later in the week, maybe we'll get something, but this is not even the cleanest area. My opinion on this one, and again, there's not going to be a trade setup every single day. 121, kind of 35-ish is a great area for selling, and vice versa. 119.87 is a great area for buying. Unfortunately, we're smack in the middle, and it's going to be about 70 pips down or about 77 up, and it has a daily ATR of 128. So looks like it'll be probably a tomorrow-based entry, if anything, if it doesn't just do one of these and start going sideways on us, right? Pound yen. So pound yen right now, pound yen is up only 19 pips from where we were yesterday. Now, does that mean it doesn't have a lot of movement? No, but over here, right? Here's where we are right now, and right here is where we were yesterday. Here's that Navarro pop down, the pop up again, and again, we've seen a crash. So the pound has had a lot of movement, but in the grand scheme of things, I mean, we're talking about a pop down of 80 pips, then a retrace back up of 115. Since last night, it's dropped 128. So a lot of movement, but it's literally been kind of, basically going back and forth inside of a small level, right? On a 4-hour basis, we talked last week about 134.16 was kind of a level we were looking to get short in. Unfortunately, it didn't quite make it there. It did get front run. It did put a situation in, but we've been unable to kind of catch a break on this one. It keeps pulling back to zones, and it's going where we want it to go, but we're just missing entry. Again, front running is something that does happen in markets that don't have as much volume. Being the summer, we have a lot less volume right now. So for me, I'm still going to maintain, a little bit, maintain patience in this one. 134.16 and 132.28 are two areas that I am very interested in for, potential buys and shorts. Where we are right now is also another one that is probably not a horrible level. Again, we did have a drop at base and then a nice push lower. That's kind of where we're at right now. Again, be a little bit cautious. It is 12:30 in the afternoon. Currency contracts dailies they're an hour shorter. So again, keep that in your radar. There are some 2 hours, but this one tends to get a little bit slower in the afternoon. And also, again, with knockouts, the pound yen, even though it is the most volatile pair, didn't make it to the cutoff for knockouts. But you can play this one over on the call spread side. I looked at this one earlier. Let me make sure. Let me just confirm it here. Again, the dailies I'd be a little bit cautious with. There is no weeklies right now. Let's see, right where we are right now, we're at 133.33 as an indicative. And actually, there is a small position. There's only about 2.5 hours in it, so that's why, again, I'm always a little bit leery in the afternoon. But kind of this is what I'm talking about. You guys can see right here that where price is, there is a level of basing, which tends to, again, the way that this pushed off again, this would be an area where we'd be looking for shorts. There is this call spread right here at 133.30, right? The indicative value is 133.32. So we're giving up about 2 extra pips, but the risk on it is only 11. It's rather small. This one has an ATR on the 30-minute of 27 pips. Again, it's starting to get a little bit slower, but it does have the ability to move. This was a little bit earlier in the day. I'd be all over this one. But again, because right now the pound is officially kind of over for the day, just be a bit more cautious. But again, this is one of those examples of why it's important to go in and understand where your call spread ceilings and floors are. Remember, call spreads are a little bit different. Price can be outside of the ceiling and floor, and it does not get knocked out. It gives us the ability to get into some trades, again, with very, very low risk, right? Because we are slightly out of the money. Remember, time value is a bigger deal, but at expiration, it can expire with an actual value. It's not a binary where it's all or nothing. So it's kind of a combination of kind of the two there, right? But that's one of the things I love call spreads for, is if you can find something maybe just slightly out of the money, they tend to be good little setups. Okay, get these in the morning for news time. Those are my favorite, all right? All right, let's bring that back across. All right, so let's go across now to the pound dollar. So the pound dollar, I've had this level sitting here, and I've been waiting for this level for a while. I didn't really like anything over here to the left. So even though Navarro had kind of pushed us down, there was actually a trade setup last night. Okay, so I'm going to actually slide this across, okay, just so I can keep that area marked off. But here's another example of a failure to go higher off of news, okay? You know what? I'll do it with these because I can move those out of the way easier. Here was that failure to go higher situation, okay? Failure to go higher. We didn't really have anything clear, which is kind of similar to what NQ did, right? So it pushed, it drove away, meaning that, hey, listen, sellers stepped in, we ran out of buyers, it jammed it down, came back up, there would have been an entry. This one didn't quite make it to a 3-to-1, and actually it ended up going out the top and then coming through the bottom, but you were about 2.8-to-1 at this point. So again, not a bad trade, and again, this isn't the overnight, right? But that's another example of the failure to go higher setup that I absolutely love using. Let's move this back across so I can explain that one. Yeah, that's fine. Just want to make sure I didn't delete anything. So we do have a level lower, okay? You guys have heard me say this. This has been a golden nugget for a bunch of different people that I've mentioned. Levels like this of basing do not last forever. Nothing in the world lasts forever except like gravity, right? We've had one touch that was emotional, went pretty deep. We had another touch, right? We had another base and another push in here again. So the next push through is technically, right, 1, 2, 3, 4. And again, I thought that was going to fail. The next time we touch this zone, this is a high probability to fail, okay? Zones that fail tend to be great areas where we're looking to short on a retrace. Again, this is the HP trade, right? This is the Harry Potter trade. So looking for a break below 124.30 for me, 124.30. Looking for a break below, a slight base, look for a retrace back up again, offers very small risk. Now, unfortunately, we have a knockout bracket right here. I just updated these knockout brackets a little while ago. We will get another break right here when it comes through, okay? That may give us another paint somewhere in that level. Actually, it'll probably give us a paint up here. So unfortunately, this probably won't be the best knockout setup, but it could give us a potential binary, right? Depending on when this one hits. Ideally, these are absolutely great setups to take at the London Open or at 10 a.m. reversals in the morning. So potentially, if we can get a grind down for the rest of the day into the overnight, break this level tonight, retrace back up for tomorrow morning at London Open, there's a nice little short there. Or if we grind down and we're kind of basing in here, and we kind of punch down during the European session tomorrow, and we start to pull up in the US session and we hit here around 10 o'clock tomorrow, that also offers a great opportunity. Okay. A lot of people will ask me, what does a typical trading day look like? For me, I base it off of when news is, but also the most popular times where you're going to see movement. When you can coincide levels with the most popular times of movement, that is, in my opinion, where you get the highest probability targets or the highest probability entries. This is one of those situations and one of those scenarios where if we get a pull down, a pull back up, and it's either, again, you could do it US Open, but again, timing it around 10 o'clock for reversals is always a great time as well. So, you could do 8:30, 8:30 is not bad, or 10 o'clock, or, obviously London Open as well for this level, okay, in a short. Now, Euro Pound. Euro Pound on the daily, guys, has been in an area that we've talked about. The last time we hit there, we pushed away, and again, we pushed back to it 2 days ago on Friday, and we got a pullback as well. It's been really kind of stuck in this zone, right? I mean, we've seen it here. It barely grazed the zone. A nice retracement down. Push back up again on Friday. We did get a nice pullback down again. Actually, this was Friday's right here. This was the pullback that we've seen since that time. Last night in the overnight, we did get a push up, and it makes sense. All the European data was great. They're showing economic expansion. It obviously has retraced back down again, and the pound did come in with some good data as well. So it's kind of watching each other out. I think this is one to watch. July is a very important month because, again, that's where the true Brexit is happening. It's been kind of quiet. We haven't heard too much recently about it. But there will be some big movement coming. So I'm very curious to see if this 4-hour zone is going to continue to become an obstacle to the downside, or if this is going to, end up breaking through here with pound weakness, and we're going to start going back up to this higher part on the curve. So no real trade setup on the euro pound for today. If anything else, I would say on the lower time frames, I've been a bit more bearish trying to play these down plays. Again, failure to go higher was right here. There was a little position right here. You guys can see that there was an entry here. We touched another entry here. We touched again. So there's been 2 1-3s on this one. And again, any more than 2 hits, you typically number 3, you're looking for some type of a break, and that's kind of where we're getting that on that push forward. So another example of a failure to go higher. Again, this is what we're looking for in the NQ. Boom, 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 boom. 2 1-3s out of that one. At this point, really not a whole lot going on. Now, euro dollar. Euro dollar is coming out of a zone right now. Actually, we're out of it by about 16 pips. Okay, this is a level. Unfortunately, this is another one of those. I love knockouts when they're close. Unfortunately, the knockouts on this one are a little bit far from where we need it to be, so we need a little bit better of a setup. So here was the Navarro speech last night. This one did not move as much. It dropped the retrace rather quickly. You had that same kind of bounce back down again, and then obviously the morning hours today have been good. I'll drop it on an hourly. So you can see here, this was a zone that we marked off last week as well, this 113.36. We have hit it. I do like this setup. I think this setup is a pretty nice setup as far as how they go. The 1-3 is in a pretty good place. I'd probably take it off a little bit before. I'd like to get out of this position before the big spike. But for the most part, I mean, it did nothing for 2 hours, then spike up with no real retraces. That's what I would call a racetrack. So again, I do feel that this is not a bad short. Didn't really pair up great to a knockout. So for me, this was more of a spot currency based trade. And with being at 1-to-1, I'm kind of more moving this one to break even. One of the things, and again, always keep this in mind, Nadex has amazing opportunities in it. But one of the things that you need to worry about with Nadex is also timing. Things have to hit levels, and again, your profit targets. Expiration is something you definitely need to worry about. I think knockouts are great because it has such a long expiration, but they only make a lot of sense for me, in my eyes, if you're near the ceiling or the floor, because that's what I'm using to control the risk. I'm using that knockout. You could have taken it in here and kind of manually watched it. For me, it just didn't match up on this one, but obviously binaries did make sense. With it only moving 18, though, you need to worry about strike differentials. Again, I talk about kind of what are the best times to kind of trade these things, right? And what did I mention earlier? 10 o'clock is one of my favorite times. Okay, I don't know if you guys can see this down here. It gets a little bit small, right? It's telling us right now that it's 12:30, right? When we go back, you can see that 10 o'clock is when it was hitting that zone. Okay, right here, 10 o'clock. I don't know how many of you guys look at this. And again, this is one of those things that I feel that everybody should know about. Let me bring it across and I'll show this to you. Okay, let's close this one down. Let's go across to the euro dollar. When knockouts aren't there for us, right? Yet need to have alternatives. Well, here's the 10 to 12. It's expired. Actually, I guess I can't look at it. I can look at this one. Look at what the strike differential is. Okay, the strike differential for this time is 4 pips. Okay, well, this would be ending at 1. So we have 16 minutes left to go. Okay, this was, again, it started at 11. From 11 o'clock when this opened, at this point, we have moved 19, almost 20 pips to the downside. So obviously, 20 pips is a bit higher, right? But when the strike differential is 4, we've moved 5 strike prices to the downside. So the 2-hour binaries off of 10 o'clock entries are great opportunities. Okay, I'll say that one more time just to make sure everybody gets it. And again, write this down, right? 10 o'clock is one of my favorite times to enter a trade off a smaller time frame, like a 30-minute, using a 2-hour binary. Okay, now, you could have used the 10 to 12. That would have given us the most potential in this one. But you can see this one is still pushing. And based off of where we were when this candle opened, again, we're at 20 pips right now. It's a 20 pip drop. So we've moved 5 strike prices to the downside. Okay, so again, being in the middle, you can see 5 strike prices gets eaten up pretty quickly. Gives us the ability to take it out of the money and then again, close it down a bit early if you like. All right, and again, we have 15 minutes to go and this thing is still driving back to the downside off of a 10 o'clock reversal, right? Because again, in the overnight, what were we doing? Grinding, 10 o'clock reversal, boom, push back to the downside using a 2-hour binary. So if knockouts don't make sense, learn how to trade the lower time or the lower duration binaries, guys. This was an absolute perfect setup off of that one today if you guys were able to grab it. Now, dollar CAD. Okay, dollar CAD also had a bit of a reversal. Levels that we talked about last week, right? These are the two levels that I had mentioned last week, 136.12 and 135.09. Okay, let's go back and let's see. We'll go to the hourly just to make it a little bit easier to kind of track and follow. Okay, let's click our time on. So last week we were at the 16th, right? So the 16th is sitting right here. Okay, so as you guys can see, boom, here's the 16th at 12 is right here. So we had missed an entry. It went up. It came back down. We kind of missed entry here, but here was another short that happened on Thursday and dropped to our 3-to-1. Again, here was Friday. We came all the way back down to the same level, took another pop off, and again, we just had another pop off this morning. Now, the low's been hit a few times. I probably wouldn't have taken this long again. But as you can see, guys, this top and bottom, this sideways channeling has been really great to play in both directions, okay? Now, did we get an entry here on last Wednesday? No, it got pretty close. And again, that's one of the nice things with binaries, as well as call spreads. You just need to be close, right? Again, it didn't come back down, but we may have gotten a great entry. This is not one of the knockout-based pairs, although this would have been great to play knockout-wise, back and forth with as much travel. This was a range of about 103, so good movement during that time period. As of right now, I do feel that this zone is in jeopardy of failing. It's been hit many, many times. We push deeper in there. There are some buyers obviously stepping in based off this wick formation, but I do feel that, again, we should probably move this back down and be starting to focus on really kind of what's happening in this level, all right? Below this level, again, we got probably a room to run down to here. But again, we got to get that confirmation of a push. I'll probably be looking for shorts, maybe small time longs, but right now it's enough. It's about 55 pips away. The daily ATR is about 115. So we got some movement in this one, but I do think we will push back down. So no real setups or nothing that I really love right now in this pair for the rest of the week. I do think topside, I think we're good for one more hit. The response that we had off of this, I do think we have one more hit at 136.12 if we get up there, but I do feel that this one is finally going to break, but it was a great trade setup for last week, anybody that grabbed it. Now, dollar yen. Dollar yen, we've been talking about this for what? 2 weeks now, 3 weeks now. It is so sideways based, and last night we finally had a big push and rollover on this one. God, we were stuck in here forever. Okay, I still have an area that I'm looking at up here at 107.72. Right now, you can see we just bounce off of a lower level. I don't really love too much in this one. There is a smaller time level, and again, we can see the indicator grabbed it right here. Probably off of this level is kind of where the safety of it is. The reason I'm pointing it out is because there is a knockout bracket sitting here at 107.29. It's going to take some movement. We are going to have to retrace this entire bit of a racetrack, take this knockout bracket out. But I do like where this one is. And again, you guys could have got into this position last night with that knockout. And at this point, you would have been out on the downside, right? It's far exceeded its 3-to-1 risk to reward ratio, right? It's far exceeded this at this point. It came all the way back down again. That area is probably good for one more. All right, just by the way that it moved out of that zone. So keep that one there. That one is at approximately 107.15. All right, so again, look for that one. It took a nice bounce, but again, I do think this one will continue to push down. Everything I have is as a short, but I need to pull back up to get into this one on a decent basis. Now, dollar Swiss. Okay, so dollar Swiss. This one has had some interesting positions. So last week, this was an absolute amazing one. This week, based off of what we had, let's see, where is it? This is the 30-minute. We're sitting right, it's right in here, okay? This was the actual entry. Now, depending on your platform, okay, there was your entry into this position, okay? Since Sunday night at the open, it's done nothing but really go straight down. Obviously, we had a little bit of a pop here, but this one has just been straight down. So what we need to do on this one is kind of pop this one up a couple levels to see where good levels were. This was a level we had talked about last week, and again, we did get a bounce out of that level. You guys can see right here, this came across and tagged it right here, right? Tagged it right here, ended up pushing higher. So I'm going to remove this one right now. Actually, I can extend this here. We talk about Harry Potter as in pulling back up again. There was your kind of pull back up and then collapse through the bottom. So there was another small trade in that one. Where we are right now, I like this 93.92. This is probably a Wednesday kind of target. I'm going to move this across and kind of put us here. But that's basically what I'm looking for, 95.20 and 93.92 to the downside. There is a knockout just slightly below this level, which may be okay. Let's see. The risk level on that one is about 15. It's about 5 pips past. Maybe. This knockout, this 95.18 will be taken out before we get up to this level, so it's just not a valid level. I still think on this one, the best opportunity is going to be to wait and hold this one to 93.92. Wait for this one to come back down. There's going to be some smaller chances on this one, but in the next day, 2 days, I would say that I'm still bearish this position. Wait for it to come all the way back down again. All right, let's jump across to gold. Okay, so gold, as you can see, we finally got back up again. Okay, we finally pushed higher. So we've had a couple different short entries in this one. I was waiting for this to come down. I was hoping the news last night would finally be what kind of pushed this back down. I'll delete the price here just so we can kind of clear that, and we'll kind of push this across here. We're going to hold it there because, again, it will come back down there. We're going to wait for this one. We'll wait patiently for that to kind of come over. So now this is very much similar to what we have. Oh, was there a level up there? No. It's kind of what we're talking about with the NQ. We need a failure to go higher situation. We don't have it right now. In fact, we don't even have any good low candles to use right now. We have kind of wicking back and forth. So no entry. What we're looking for is kind of like this, right? A push up, a nice pull back down, a nice pull that fails to go any higher, and then take it when it leaves the zone to kind of push to the downside. And again, this one hit here or it hit here and kind of push down. So this is what we're looking for. We're looking for a decent push down, find that top, look for this to turn and flip back to the downside. And again, this is an inflation-based trade setup. They're saying that inflation is not on anybody's radar right now. They're not looking at it. They're not concerned about it. This is everything going on last night. They're like, oh, God. And again, I think a lot of this has to do with the barb sent across with Navarro's speech last night. Again, economy's not great. With no economy, there's no such thing as inflation. They can prop this thing as high as they want, but it's just not on the radar right now. So look for that. Silver is slightly different. Okay, silver is not at all-time high, so there's a couple different levels here. As you can see, we had a zone last week that we were talking about up here at this 1770 and 1772. We had a bit of a bounce off of that one. We did have a zone that we did mark off last week saying, hey, listen, there was nice movement at this level. We needed there to be a kind of a, we needed a lot, right? We needed a lot to happen. Last week, whoops, I'm hitting the wrong buttons over here. Last week was right in this zone here. And we said, hey, listen, it's probably too far to go in 1 week. It'd be a next week target. As you can see, we ended up hitting it earlier this morning. Actually, I guess yesterday morning. And you can see the pushback down off that level. Okay, so we're close. There's another level sitting in here. I don't know if many of you are trading silver. This zone is probably good for one more hit. I don't like how it front runs like that. But again, a lot of time it needs just a little bit more oomph. This didn't really enter the zone too much, but right around $18 to $18.10. I do have a zone. Again, you can find silver under the Commodities tab to be able to take advantage of that. It is not a knockout, unfortunately. It is just going to be a call spread or a binary. But I am in a position where I do think we will have a turn here that I have alerts set on this one to see if we can get a nice little trade on this one. Now, last but not least, let's go across to oil. So oil, I'm going to bring something in from TradingView. This came directly from IG. This is one of those ones that we had a couple different levels in here. And again, on a daily basis, it's kind of hard to pull much from this right now because on a daily basis, remember, we had this all the way down to zero drama, right? We're kind of sitting in the middle of what I would call a racetrack, which there's really no clean sellers until the 46 range. So we're using much smaller time frame zones, right? We can drop it down to an hourly basis and kind of see, okay, listen, where were we? Okay. Here was kind of one of those, hey, listen, we got to push. We got a bit of retracement. Unfortunately, this one, when it went all the way down, it's not what I would consider a failure to go higher, right? And again, this kind of, I had it marked off last night, but none of this has actually been printed. I didn't realize how far it was actually going to move. Once something pulls this far, guys, again, this is that teaching kind of moment here. A failure to go higher tends to be something that happens quick, okay? This would be more, and again, I'll do this for a 30-minute. Yeah, it's okay. It'd be there. We want to make sure we get the whole green on this one. Suck that back into there. This tends to be a failure to go higher. When it pulls down and bases and drops, it's no longer failure to go higher. When it pulls down at bases and it goes higher, that tends to be what we were looking for. This one has moved around, so it was not necessarily the best setup for that one last night. Here we got a little bit of a short. I would say, again, we're going to go kind of short on this one. Areas I'm looking for tomorrow for the inventory numbers. This level is proven right now that it could be an interesting level to short from, 41.25 to 41.50. Another area I'd be looking at right here is the 39.62 to 39.33. Again, a lot of the oil ones, we got to kind of see what the European session does ahead of time. But this is not a bad basing level. I do like the levels down here, but that's, you know, that's basically requiring there to be like a $3 move in price in the overnight. Don't think that's happening. So right now, again, I'm looking for kind of longs to go in this level. And again, if price drives itself whether down or this level manages a hold in the overnight, I'm assuming if it goes up, we will get new levels for news tomorrow. But look for the oil inventory reports at 10:30. Great way to analyze this one is look at this one at 10 o'clock a.m. tomorrow morning on Wednesday. See if we have new 30-minute levels of basing where price really pushed off of it nicely, or potentially if we're grinding in this level, look for a buy. Okay. Like I said, this was a failure to go higher this morning. It's been a nice push, right? 25 down to, let's see, 41.25. So yeah, it's moved about what, 60 cents to the downside. Not a bad morning trade in the futures market. All right, but for tomorrow morning, look at those two levels. Look for those areas of basing. Again, ways to find this one is drop down to your 30-minute charts. Look for levels of basing where you see a lot of green coming out of it, and again, vice versa here. This was a nice little base, push, test, and punch to the downside. All right, so that is oil. All right, so that is the three that we were looking for. With that being said, guys, make sure you mark off your calendars for next week. It will be the last webinar of June. Then we are in July. I can't believe July is already over. So mark those calendars off. If you guys have anything else that you need from me, you guys are more than welcome to message me. Oops, that's actually from last time. We don't have that. It's not tomorrow. But if you have questions, you're more than welcome to check out the website. You can go to look out the classes on the Bitly website. You can check us out on Instagram, Facebook, YouTube, Twitch. You can join Discord. It's absolutely free to join Discord. Or just do the old-fashioned, and I say old-fashioned, it's kind of funny, but you can email me at support@keeptradingsimple.com. A couple of people messaged me last week with questions, and I'm more than willing to clarify anything that you guys need. So with that said, have a great trading week. Thank you for joining us today, and I look forward to seeing you guys next week for the last presentation of June. You guys take care and have a great day.